So Henry, I don't know whether people realize the role you play, but if you could probably give us the context, you really are the person who decides whether a country's, let's say, their entire market should be included in what turns out to be trillions of dollars that are trying to find out whether it should be in a diversified fund. Can you tell us the process you use?
To basically try to understand the needs and the requirements of global investors in making a market investable for them, and then go to the country and try to understand what is it that they have done in terms of regulatory environment and market access and investability and all of that. And so we go back and forth between the two, pretty much primary participants here, the investors and the issuers, in the form of the country, and then have a methodology and render a judgment basically as to whether the market is investable and it can be included in our indices or not.
Okay, so let's use focus on the word investable. If a country's government has decided to turn some companies from profit to non-profit, seems to be upset with some companies and how much money the CEOs will be making, of course, speaking about China, does that give you second thoughts, or is that one-off? And what can you do as the person who already decided that China should be a member of the Council of Nations when it comes to finance? Maybe they don't deserve that status.
Well, Jim, a lot of what we do is in a big part of our business is define the investable universe of companies. We don't opine whether the company is going to be, good profit making or not and the like. And therefore, we just try to create what is available for people to invest in and what is not available. So that is what we call the market cap indices. We obviously have other indices that narrow the scope. In terms of ESG, for example, is this a company or a country that is following certain norms of investability, of environmental, issues and ratings and all of that. So, but the market cap indices are the investable opportunity set. If there is intervention, obviously, in a lot of countries, in a lot of companies, not just China. China is obviously a big example of it. But then these investors have to decide whether they want to overweight that company, not overweight it, or not even invest in it.
Understood. Now, we have a huge move, obviously, in ESG. I don't think people understand. Henry Fernandez actually does the tire kick in these situations. Henry, how can we be sure that companies really are deserving of a positive ESG status, given what you and I both know are companies that are trying to pretend that they're good for the environment?
Yeah, what we do in our ESG in general, and we can talk briefly about climate as well, but in ESG in general, we gather information, on the companies from all sources. About 50% of the data that we gather is directly from companies' reports to Securities Commission or press releases or websites or whatever. The other 50% comes from independent sources like courts of law and environmental agencies, and the like, in order to understand other aspects of their ESG criteria. And then we have a model that it is very scientific as to how much we weigh each one of those areas depending on the sector, the industry, and we create a rating. On climate itself, it's climate is part of ESG, but it's also being broken out in its own. It's going to be an incredible amount of needs for information and data and metrics on climate, especially coming out of COP26 in Glasgow.
Yeah. Henry, it's David. I mean, I can understand on governance, even diversity and inclusion, but when it comes to the environment, as you say, and climate and all the inputs, I don't know if I have confidence, even with that rigorous process you describe at this point, that you're really giving me an accurate reflection of what I can expect as I allocate capital and try to do it appropriately.
Well, first of all, that is the fundamental question. A lot of investors around the world are not getting blind in terms of understanding the current carbon emissions of companies or any other issuer for that matter. And secondly, what are the projections of those companies in the next 5, 10, 20 years? So we at MSCI have developed metrics to be able to estimate the carbon emissions of about 10,000 publicly listed companies and 15,000 private companies. And on the publicly listed companies, we're going beyond that. We've been able to estimate also the temperature alignment of those companies into the future, depending on the kind of temperature world we live in. Is it a 2-degree company, a 3-degree company, a 5-degree company, and the like? We have to also understand that there's a lot of data that we gather, but a lot of these are models into the future. The climate change problems is a go-forward problem. It's not only a current problem, and therefore there will be estimations. There will be accuracy in some aspects or lack of it in other aspects. But we cannot necessarily think that perfection in all of these tools and metrics will be appropriate. The perfect plan will be the enemy of a good plan here.